Welcome to The Lumber Word, where industry veterans Matt Beamer, Gregg Riley, and Ashley Buckhold dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word. It's episode 86, which ironically is the same year I graduated from high school in. There we go. Now everybody knows how old I am. You bet. Great show this week. We had a great guest last week with Brian Westbury. Got a bunch of good feedback, and Matt was asking, I think we almost had, on Podbean, like 500 downloads plus all the other apps. So it was good. Nice, slowly trending up move. And Matt, you mentioned there's some people listening, which is good that you know.
I'm continually surprised by just random comments from people saying that they listen, and it comes from a wide variety of different, angles of the business, from just average traders like me and you to board members of big companies. And interesting. So I think we're doing something right. I think the one common theme that I've heard people tell me in person is that they like the honesty. So the fact that we're just telling it the way we see it and not pulling punches per se is refreshing, I guess, in this modern world of ours.
So refreshing. It's so refreshing in this industry to be like that, isn't it? You run into every day, people that are the industry's, like there's a lot of people feel like it's like mushroom theory, keep people in the dark, feed them a bunch of SH, I used to work for a guy that had that theory.
Yeah.
That's no way to live your life.
No.
In the dark, getting fed SH.
We'll have to open up our next episode with Billy Joel's Honesty song, which is a favorite of mine. I don't know if that's actually the name of it, but lots going on this week. And we'll have a lot to talk about when we go out to Russ's thing. I haven't gotten my ticket yet for that, Matt. Have you, to go up to Vancouver for Russ's event?
No, I mean, I can drive up there, so.
Yeah.
But it's a good reminder. I need to get that on the schedule and get it all booked and get my hotel room and everything, because it's been a while. I think it's been since pre-pandemic since I went to Canada.
Well, not only that,
it's been 5 years.
We actually got to figure out how we're going to do the podcast live sitting in front of a bunch of people. We'll have to really fire up some pretty cool stuff.
You got a little time to work on it. That's for sure.
Yeah. But everybody, the Global Wood Summit sponsored by Russ Taylor is going to be October 29th to 30th in Vancouver. So make sure you go on and at russtaylorglobal.com and register for that. You can see us three beautiful people live at that event.
I mean, everybody told us that we have that we had faces for radio, so I don't know how that's going to work.
Yeah, it'll work. It'll work great. We'll have to get
put hats on. They won't recognize us anymore.
Market update. I'll jump in real quick. I think this is going to be, if it holds true, Friday will be the third week. I looked at midweek print was up. It'll be the third week that we kind of get everything slowly moving off the bottom. I guess you could say slowly, but talking to some people yesterday, for most species, maybe southern yellow pine not as much, but off the low trade prices, where counters 3 or 4 weeks ago, low trade to prices today, we're up $50 to $100 a thousand on some items.
I was gonna say 50 or 60. I don't know where I'd have to really find out with the item that's up 100. But I love your thinking.
Well, 6-inch. I mean, 6-inch has made a big move. I don't know, and especially in Western spruce, right? I mean, I heard that one of the mills was off the market on 6-inch yesterday. Is that true, Matt, or not?
No, I don't know, dude. I haven't seen any signs of that being off the market stuff myself. But I'm not sitting there following them all around either.
When somebody says they're off the market, they're saying, I just don't want to sell to you. That's all they're saying. I don't want to sell to you. Because
if you're a mill, you should be on the.
We make lumber every day, so we should have a price. It's what's the ship time? Hey, we're going to make it. We might be 4 weeks out, but we'll put a price on it.
So what I was telling Gregg the other day, Matt, was I had guys calling me 2 weeks ago saying, hey, the market isn't going up. I'm like, well, why isn't it going up? And just explaining to me, look, after 4.5 months of a down market, I think everybody feels kind of beat up a little bit. We all have, as Matt says, shrapnel sitting around. But I got to tell you, the last 2 weeks have actually been pretty good. And the last 3 trading days are probably the most trucks I've sold in a while.
Hey, welcome to the business. Great to have you.
But what I said is it came from a variety of people. I mean, we saw everything from other wholesalers calling us that don't talk to us to cover items that they needed quickly. What does that usually mean? Short covering, to people not countering anymore and paying your price. I told somebody the other day I got more orders saying no than saying yes the other day. Gregg, Eastern Spruce, what's your thought out there as you're rolling through the market and not buying anything? That was a joke, since you always say you're not buying anything, and I walk in and see your PO.
I'm not buying. I'm not buying a lot.
There's a scale for Gregg. Is when I'm not buying anything means he only bought 10 or less. He says I'm just buying a little. He bought from 10 to 30.
I mean,
and when he says I'm really buying today, he's bought over 100.
It's like, it's like eating potato chips, or I mean, I do have a little of an addictive personality. So, once I start doing buy. But that having been said, I got another email today about bringing the inventory down. So I'm really trying to respect that, looking to sell a little more than I buy today. But that having been said, to Ashley's point, if prices are up, $50, $60 from the low trade, they may actually be close back to some of my average costs. So I'm pretty happy about that. And the really thing when I look at it is I look at September, and if I just go on, 2x4s, which we acknowledge was undervalued, and today, if the market's somewhere low end 465 to maybe 475, you're talking about, September still being $40 premium to that. I don't want to jump ahead, but my conversations with most people that I speak with is somewhere between, I don't think that the market's up, or I don't think the market can go any higher, or I'm really worried that it's going to set right back.
I have a question for you, and if you don't want to answer it, it's fine. It might be a little too personal, but how do you, and you can be specific if you
Matt,
want to.
You can't be too personal. Come on.
Well, this is going to be, you'll see where this is going.
Are you going to touch a sensitive subject? Yeah.
No, this is just something that you'll hear. Here, let me just ask it. So when you're unwinding your short futures position versus your cash inventory, do you have any advice, or do you have any, how do you do it in your mind? Is there a formula that you follow, or do you just go by feel? Because we've had a futures rally here, right? That's a much larger rally than the cash rally. The cash is trailing the futures rally. So if I'm hedging, I know how I would do it, but I want to know how you do it.
Okay, well, I'll show you. I'll show you mine if you show me yours. Ash came in the office. I don't know, yesterday or
today,
the day before. Are you going to buy some back? And I said, well, let me look at something. If futures a premium or a discount to cash, right? That's the first question you ask. So if you say, well, yeah, but people say, hey, Gregg, what do you think? I go, well, I think that September can go, if it closes above 517, it's going, 540, 550, 560. Why don't you cover your shorts? I went, well, because right now it's a premium to the cash market. So I'm going to wait for the basis to work for me. When do I want to cover my shorts? When it's a discount. That's when I want to cover. I don't need to unwind anything.
Position? So
right?
They tell you to bring your inventory down, and let's assume that you have brought your inventory down. Now, are you going to just start pulling some cash chips? You've already lost the money on the cash side, but you still have this hedge in the board. Are you going to start taking the hedges off as you reach your cash goals, or are you just going to wait until there's a discount?
I'd wait until it's a discount, because I can always buy more cash and put more basis on.
Okay, I see what you're doing.
So
you and I do it a little differently.
I'm
I
always
I just
hedged.
do it when the cash is sold. I pull the hedge, right? It's like
I'm
I
always
don't.
hedged.
Sometimes I'll
So
pull the hedge before I sell the cash if I think that that's the right thing to do, which is what I did here in July. When it got down to 480 something, I just bought all my contracts back and said, okay, that's enough.
right
And
on,
then
so on July
I worked to
expiration,
get rid of my cash.
I actually reduced our total hedge by about 25% on July expiration. Went down. It went to a discount, and I mean, it was cheap. I mean, Ash came in and asked me the same question. Are you going to cover them all? I'm like, no, because
No,
we were rolling at 40, 45, $50. I'm like, I mean, I'm
they're
just not
paying
that
you to
smart.
roll. Yeah.
I'm just not that
So
smart.
I understand what you're saying, and from a technical side, when you're talking about you're picking up a premium to roll, they pay you to stay in the contract, blah 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 blah. We get that. The three of us understand that language, but there's a lot of people that are listening to this that don't. And so there's multiple different ways to skin the cat. Greg's doing it differently than I'm doing it.
Yeah.
I have a
Yeah,
I have
no,
a
some people
finite.
want to feel like it's tied one to one. It's like, hey, I have 2 cars and I have, 8 contracts, and I need to keep that all tied together. That's great for bean counters in the back office, but
Honestly, I think it's interesting that amongst the three of us here, we have slightly different strategies towards hedging, right? And then if you ask, there's five other people in my immediate vicinity that probably have different strategies too, which goes to the point that the market is much bigger than we realize it is, and leads into the next conversation, which is even on a slow day in the lumber business, there's still thousands of trucks and cars that have got transacted that day. There's no one right way to accomplish your goals in our business. Like and even from the mill's perspective, the way Hampton does business is different than the way Sierra does business, and is different than the way West Fraser does business, or Resolute, or
I mean,
Interfor. We
the
all have
first thing you have
different.
to do if you want, what are you trying to do?
Yeah.
Right. I love the conversation where the guy asked, he goes, like, well, like, why did you hedge that? Didn't you know that the price was going to go up?
The other interesting thing we were talking about today, actually, I think as this market moves up in the basis, if it goes out wider, it's actually coming in right now, and you get new hedgers, and especially people that have never hedged before. The one thing that they need to be prepared about in this market is this is the kind of market where you've got to fully be prepared in a hedge to lose a lot of money on your hedge
Yeah.
and make your money on your cash. And I think sometimes people in their head want to try to make it on both, and you can't in a lot of cases. So any new people hedging out there, be prepared. In the best time, when's the best time to actually be hedged and realize you're in an up market when cash is moving, right? But yeah, I agree, Greg, what you said. I look back, so 518 was the close from a couple of weeks ago. So we went up against 517.50 in September. So I think we got to close above 518. If it could do that, that's still $10 from here, right? As we're talking about this today. Maybe you could see that, but we need cash to continue to move up. Matt, what's going on in the Pacific Northwest? I saw one more closure with, is it Malheur Lumber?
Malheur Lumber. They've been
And
around for
you were
40, 50
saying that.
years.
Remember, you were saying that for months. There's going to be more of these closures,
Well,
right?
the Ma and Pa, it doesn't matter if it's Oregon, California, Washington, British Columbia, Alberta. Consolidation in the lumber business is tough on small and medium sized sawmills producers. Um, and then the way politicians and the law is going against our industry. And not only that, there's outside interest groups that are going against our industry and have been for years. This isn't some new revelation. This has been going on since the 80s. It's just more expensive to be a producer. And this is one of my, I guess I'm going to change it over to some other topic here. This is one of my disappointments with the state of the lumber business as we are here today at multi-year lows, because once again, all the producers figure out a way to outproduce the golden goose, right? And so we just run prices down to multi-year lows because too much inventory, not enough demand, whatever you want to call it. We're people stacked up lumber, they didn't have a good sales plan, however you want to call it. But this is the natural state of our business since I've been doing it in 1994.
Yeah.
And so I thought there's 2 years of a home run for all these producers. I sincerely thought that aha moment had come for the lumber mills where they'd finally realize that, look, if we don't have to outproduce the market every single time it goes up, we can just keep our production static and just let the prices rise naturally like they should, which is what happened. We couldn't outproduce the market in 21 and 22. And then when that all went away, the mills had reinvested in more optimization. They had brought their unit costs down. They had acquired new sawmill production. They built new sawmills. I mean, yeah, sure. We just went back to the same old, same old. Now, maybe it's just the lumber business is just that way. But I was kind of hoping that we would have a new era where lumber started with a 5 and a 6 all the time instead of a 3 or a 4.
But
But alas,
all
nothing has changed.
commodities basically have some similarities in that they gravitate back to the cost of production, and that's how they, you find equilibrium.
It just seems like we're always like so far ahead of the rest of the world. Like lumber happens first, right? So
Yeah.
you see the sell off in lumber, that's a recession warning. Brian talked about it last week. He still feels like there's a recession coming. Well, he sees lumber as a leading indicator. I've always told my friends lumber's about a year ahead of the rest of the economy. Well, we've been going down for most of this year, right? I started talking about my worries about the market back in March when I went on spring break and saw nobody was on vacation. The place was empty. And I've been to that place 1,000 times. So, the consumer's tapped right now. The price of lumber has reached multi-year lows. It's starting to rally, which is good. And it's probably going to continue to rally. It might just be a slow grind, and that's fine. I'll take it. But bottom line is there's less product hitting the market right now. The inventories that are in the field are thinning out. The mill inventories aren't really that big of a problem anymore. They solved most of their problems in June and July. And, we're going into a time of year, the shoulder season in the fall, where there's going to be a lot of new starts and new projects, that not just in the lumber, like construction of homes and apartments, but you got your over the shoulder trade with the retail guys. That's when they're the highest point of the year for their consumption is September, October, November. And so we're going to see, an increase in the flow of material to job sites. At the very same time, there's less Euro coming. There's less domestic production coming. There's less lumber sitting around in reloads because it got liquidated, and everybody wants to be negative. I'm sorry. I mean, I want to be positive. I just think the time to be negative is past. It's look, put your big boy boots on and go out there and strap in, because it's going to be fun here for a little while. It's not going to be easy, but if you're good and you really like to work and you have a smile on your face, like Gregg says, come to work every day with a good attitude and a smile, you're going to have a lot of fun the next 90 days. There's going to be plenty of opportunities for you.
Under the green shoots heading, pending home sales came out today, rose unexpectedly. I mean, the headlines are pending home sales pro surprise jump in June. And that was driven twofold. One is one of the things we've been seeing and pending home sales are contracts signed. When they come out with existing home sales, that's closing. So it's a 2 to 3 month lag, right, in terms of what's happened. For pending home sales, they created that to kind of get something closer to the market to let you know what's happening. So for June, right, it's still, a month old. They were up twofold. Inventory of existing homes is up 23% from a year ago. It's still only a 4-month supply. So, equilibrium on existing homes is probably more like a 5 or 6 month supply. And the other thing that's benefiting is that, mortgage rates are coming down, plain and simple.
Yes.
And, we're going to get something today, more guidance from the Fed in terms of the expectation is that they're not going to cut today, but they're going to hint that if things stay the same, they're going to cut in September and maybe begin a cutting cycle. So what is that? How does that play into the demand side? One of the things that we've had is, demand's been punk so far this year. It's all been about supply. Supply is crushed because demand has been static or maybe down on aggregate. Throwing that out there. I mean, things that make people, Huh?
The
You
big
look,
change for this year was how bad multifamily had started the year out, right? The first half of the year, multifamily was way down, and now it's starting to recover a little bit. Something Brian touched on last week, something that you have touched on a couple weeks in a row here, Greg, is the big surprise of 2024 might be the rebound in multifamily as we close the year out, and that there's a lot of truth that I put a lot of thought into what you guys have been saying, and I don't think you're wrong. I mean, the economic indicators are pointing that direction again, right? There's another thing that's happening that I've noticed in my local neighborhood. There's just more homes for sale. Like I didn't see any for sale signs in my neighborhood. I'm guessing there's 300 homes in my general area, and I have just seen maybe one or two, occasionally. Now I'm seeing five or six, seven, and they're moving. They're actually getting sold, and prices aren't at their peak, but they're within, say, 10% of the peak of 22 of what was March of 2022. I think was the highest point. And so, I mean, that's good. That tells me that people are starting to feel more comfortable with these 6 and 7% rates, and they're just moving on with their lives. Because I think those same people wanted to sell their house 2 years ago, and then they just were afraid to, but now they're not afraid to. So that's a good sign.
it's interesting, Matt, Greg. I mean, I'm going to agree. Like, I really believe the market turned around 3 weeks ago, right?
Well,
From the seat.
you don't even, you like called it. You went out on Twitter universe and like said, "Hey, this is it." I mean, you called the absolute bottom, and people have taken you out onto the woodshed over that, Ash. You've taken a lot of
So,
flack. You've gotten some hate
listen,
mail, haven't you?
it's a big time from when we sit here and see it in futures and the cash market we watch. And what I saw was a complete, as Matt said, liquidation at the mill inventory, taking whatever they could from the mills we deal with all the way through June and July. And then we got a bite. Things started moving a little bit. And I think that we've been rationalizing capacity a little bit. I've listened to Canfor's earning call and Wes Fraser's Reddit. And I truly believe, Matt, I'm more surprised that mills haven't taken stuff off faster in this market. I truly believe that's coming. I saw Southern Yellow Pine has gotten a bite the last 3 weeks. I mean, this is the first time in 3 months, 4 months that some mills actually have, I think, maybe it's not a 3 or 4 week, 2 week order file on some stuff. And some things they're not showing as much of. You're starting to see regular grade and premium grade spread out in price where they were just trading all the same. Matt, you mentioned multifamily. I think there's still a segment of the trading industry out there that's short on a longer term on cash prices to some of these multifamily people, and they need to buy into that to cover it. And I think overall, as Greg always says, this is a demand push market where we know or a supply push market. Sorry, we know what demand is kind of. We see that as ebbing and flowing, but there's starting to be more production rationalized. You're in summer shutdowns in Quebec and in Ontario and those places. As Greg said, less euro. We said 20%, Greg, in the first quarter, less euro came across. You made a call that by the end of this year, we may have year over year 50% less, you think, when we end this year on euro coming over here? Is that
I don't
kind of
think
your
it
thought?
was. I don't think it was that much. But I mean, the first quarter.
It might be too aggressive.
The first quarter it was down 20. It was down 23% in the first quarter. It's going to be down more in the second quarter, and yeah, you probably have a run rate. Q3, Q4 down 40% or more. And so yeah, it's going to be down. It's going to be down a lot unless there's
in the last
substantial. Unless you get 2x4s back well into the 500s delivered, there's not a lot of incentive to push a lot more wood this way, right?
I mean, especially when it's mostly 16s, right?
yeah.
I like the market, Ashley, like current cash market, interesting shape and the way it's behaving for me. I'm actually busier than I have been, so my actual trading day is I'm doing more truck business than I was 2 weeks ago. I'm doing about the same rail car business. I'm glad to see that my truck business has improved significantly, but at the same time, I can still buy things that I want to buy for my inventory on counter offers. and I can buy exactly what I want to buy and nothing else. I haven't really had to settle for most of my key items that I want to carry, which is perfect, right? So I can be
Yeah.
a good seller and an aggressive buyer. As a trader, you want that. That's the sweet spot. And I feel like right now this is for me really a good time to be an active trader, but stay really constrained at a very narrow focus of what I want to buy. I want to buy the best items for my inventory, the most liquid items for my inventory, and avoid the stuff that just sits there and becomes shrapnel 6 months later. At the same time, I've been able to clean up a bunch of my inventory shrapnel over the last 30 to 60 days to the point now where I really don't have any problems anymore. I mean, I have one or two, but that's a smaller list by far than where it was 30 days ago or 60 days ago. And I can focus on the future and not the past or the present. And then the future, we're not going to really have a big market rally until enough people have days where they can't find what they want. You're going to have like more than just an hour where it's uncomfortable to try to buy a certain SKU. Like for me, there's certain things I have to carry in my inventory that I always struggle to buy. They're just hard to buy. And right now, only one of those things is really a problem, and it's just a minor problem. What if I had 5 things that I need to buy on a regular basis for my inventory that were all a problem? I'm just one guy carrying a really limited range of inventory as a trader. What if I was a retail buyer and I was buying the whole full gamut of 2x4 through 2x12 and OSB and plywood and God knows what else I had to buy every day. When you start hearing no more often, oh, I don't have it, can't do it, sorry, we're sold out. That's when people start to really pay attention. We're not there yet. We're still in that bottoming out phase.
Yeah,
So
and I don't know. We may not get to that phase, Matt. I mean,
we might not.
I kind of
I
build
don't
three
hope we don't.
scenarios. I kind of built 3 scenarios from here. If we all agree, hey, Ashley called the bottom. I just can't. I'm going to keep repeating that. Ashley called the bottom. And we've had that kind of initial bounce off. So, option one is that over the next week or so, the market stalls and kind of has a little bit of a give back, right? And then we're going to have to test as to whether, hey, that was all we had was a dead cat bounce, and we're going to be like go back down and we have to lose more production. Option two is that we're a stair step grinding market that continues to move higher for the next 30 to 45 days. Then the question is does that mean the market goes up another $20 to $40, or does that mean the market goes up another $50 or more? Option three is that, hey, we catch and the market's a lot shorter than we think, and the production cuts are a lot deeper than we've overcorrected, and we wake up and we're we're $50 to $100 higher in the next few weeks.
Yeah.
And then your scenario where, and that's what everybody's going to be hearing, no, I don't have that, comes into play.
What do you think is most likely, Greg? Your
I think
personal
most
opinion?
likely is probably scenario two. That would seem reasonable after 4.5 month down grind. Way more than everybody expected. You got Canadian mills have the lowest inventory that they've ever had in their history because they were all trying to get in front of the increase in the tax rate, right?
Mm-hmm. Yeah.
And that's a 60 to 90 day process to get to that place. And now they have less production going forward. So there's an ability, they have a lot more control over, who's the strongest holder of inventory? Mills. Who's the weakest holder of inventory? The end user, right? Because when end users are full, it doesn't matter what your price is. No, I don't need it. Versus, mills now have an opportunity to go, hey, we don't need to offer the market down. We can sit back and be a little choosy and allow our inventories to kind of grow back a little bit. Does that make sense?
Yeah,
Sure.
It totally makes sense. And, a good point you brought up the other day, in an up market or a market that's starting to turn, everybody was like, oh, well, everybody's shipping rail cars back through Jasper now. It was only down for 2 days. So now the market's going to sell off. It's like rail car situations and all that have do they contribute? Yes. But that isn't the reason. what they do, Greg, you said it, they give buyers cover of why they should buy because, oh, look it, we didn't see this coming, so now we should buy this, even if a market's already moving, right? For just general supply and demand reasons.
One of the interesting things as I think about it in the market is, and Matt, you've talked about this before, the changing dynamics because of consolidation. When you think about how much lumber moves with no price transparency, and I mean, that's all the lumber that's contracted, that just goes through at the market price. Nobody ever, has price discovery on it. They let someone else set the price. And then when you look at a lot of these bigger companies that are it's a push down in terms of we want to have a lower inventory, right?
Yeah.
What do you think the big yards are running days of inventory right now? And what is usually normal? And how much could the market move if they decide to add a couple weeks of inventory? Just add a couple weeks to what they already have. I'm talking a big national.
I mean, I can make up anything. I don't know. I don't.
Yeah,
know,
make it. Let's make it up.
I don't know, and I don't know, and I don't know. And like if I knew, then I don't know. I don't know. I probably wouldn't be retired. But
so is 30 days of normal inventory for a big yard?
I think I think every company is different, and that's the answer. That's the answer. They have. Put it this way: they have less inventory now than they had 30, 60, 90, 120 days ago, a year ago, right? Because that's
actually, I think you're alluding to the idea that maybe some of the large integrated companies out there have overcorrected on their inventory. All right, is that what you're intimating here?
Well, that's what it feels like to me. And not just, I'm talking everybody, but when you're watching the ocean move with the fish moving all over the place, if one person decides, one big entity decides, hey, you know what? We'll run it down. We need two extra weeks of inventory based on whatever KPIs they look at, right? That's a lot of lumber because some of these yards buy thousands of trucks a week of lumber, right?
No, I mean,
and I don't think that's
happened, dude. My personal opinion, if we're going to have personal opinions, which we should, obviously, this is how you get paid. I'm with Greg. I'm more in I like the market. I think the market's going to be good. I've alluded to my positive attitude here going into the third quarter. I think there's some good times in front of us for everybody, not just for me, but for all levels of the market. I think it's going to be fun. That being said, I don't think the retailers are going to chase things at all. I don't think they're going to change their strategy whatsoever from what they've been doing for the last 2 years. And so it's going to be hard to get $100 rally without some outside factor that we have no control over and don't know what the hell it is. It could be a meteor strike or Martians landing on my front lawn. I don't know, and I don't care. It's not.
You've had that before, though, haven't you?
I've had lots of Martians. Yeah, I mean, back in my youth, man, when I was tripping all the time, sure. But
it's in Portland, right?
Yeah, man. Portland weird, baby.
We're not going there today, Matt. Are we? We're not going psilocybin natty, are we?
You can never. I had a darkness retreat and I saw Martians on my lawn.
Guy, though, weren't you?
Oh, that was lots of fun, man. Check it out. It was what was that? SpaceX? What'd you call it, Ashley?
I don't know. It's the satellites that satellites that come across.
Actually have
the first time I saw that last year, I was like, "What is that?"
But yeah, no, I think that we're going to have to really just take what we can get here. The third quarter will definitely be better than the second quarter. I'm a little nervous about the fourth quarter. I mean, I just don't know what I don't know.
You should always be nervous about the fourth quarter. You know what I mean? It's hard making money in the fourth quarter. It always is. And
it's election year too, so it's really weird. I mean, I'm just gonna.
I always look at if I can make a little bit of money in October, break even in November, and I always lose. 9 out of 10 years I lose money in December. 9 out of 10 years, and maybe because of the last little while, 8 out of 10 years, maybe 7.
So I'm going to go with markets always do what hurt the most amount of people the most, and they do what the most people don't expect. So I think you see, based from where we came from, you could see $100 move over the next month and a half, because that would catch everybody by surprise. Now, I think it's going to be from a combination of more mills making curtailments. And how do I base that? I base that off of 2 independent analysts came out and gave buy ratings on 2 of the publicly rated stocks because they believe that they're going to right size their inventory to affect the whole market over time, over the short period of time. That's just what I feel. So I think it's going to move a lot harder than people think because nobody thinks that's going to happen. I would prefer it move slower because when it moves slower, it's better for us 3 sitting here in our business. But I just have this spidey sense that it's going to move. It's going to catch a bite and move.
Moving
just
fast right now would be okay for me.
It wouldn't hurt me at all. I'd be thrilled.
Yeah, true.
I mean, honestly,
True.
that'd be really good for the 3 of us. But I mean, I hope you're right. But I'm content to just take what I'm getting at the moment, and it's been better than I expected. So I guess I should just be thankful. I thought
For sure.
July was going to be terrible. I've been talking about this with my trusted customers and coworkers about I had planned on July being a big loss. I had a pretty good first 6 months of the year, and then I was going to have to pay some money back to the market in July just to get my inventory rattled off. And I did write down a bunch of inventory, and I hedged like a madman in the board, and through crook or however I did it, I managed to get through July with a flesh wound in terms of profit loss. And so I feel great. Here it's almost August. I thought I was going to have a devastating month financially, and it turned out to be a bad month, but not a terrible month. And I'll take one bad month out of 12, right? So I can look at August, September, October as, oh yeah, things are starting to improve again. Most of my problems are dealt with behind me. I can look forward. That's a good place to be going into August 1st. I mean, usually August is not that great. People are on vacation, like what's the big thing that happens in August? Summer shutdowns and forest fires. Happens every year, right?
Back to school.
Back
Come
to
on,
school.
it's back to school. You're probably already writing some checks, aren't you, Matt?
Oh yeah,
Don't you have to
dude,
write
it's
some
ridiculous.
fat checks
Don't
this
even
month?
talk to me about it. Let's not go there.
I mean,
Hey, you guys want to jump into Merry Date Dump?
sure, let's do it. Let's do
How
it.
about you go first, Ash? Because I'm not prepared. I'm gonna.
That's okay. I can do it. On my Mary right now is 2x4 MSR. I like that because we're going into Q3, and generally Q3, especially the back part of Q3, is when that really starts moving. We're seeing that start to separate from 2 and better. It was trading right on top. Heck, we were shipping it out for 2 and better for a while. And now all of a sudden, Greg came in off, said, "Hey, Ash, I got this delivered to this location." I'm like, damn, that's a great price. Wow, it's actually working right now, right? So it's just beginning. I think that trend is going to continue.
Even when I say it's a shitty price, you go, "Oh, that's a great price." And well, not really.
Well, I mean, I gotta keep positive, right? I mean, why not? 2x4. I'm going to do a trade for Mary. I still like the buying 2 and better or number 1 or higher grade 4-inch pines and sell in September against it. This is not a recommendation. This is just an idea. I like that. I still think that that's a good potential trade. Date, I've got a bunch of them written down here just from what I'm seeing. So 2x4 and 2x6 10-foot trims. Man, those things are just great right now. Anything in 2x4, and Greg and I, we had a bunch of 2x4 116s. We couldn't move for a couple of weeks, and all of a sudden, boom. I don't know if we have any left.
Boom.
Gone. 2x6 104 and 5/8 seems to be really good. And I like 2x4 104 and 5/8 in spruce. And I was going to ask you, Matt, how that's doing how are the Doug fir in the U.S. species doing in? Because I don't want to make a comment on something I don't know anything about, but I was going to say 9-footers across all species.
We've raised
but I'm
prices,
not sure how they're.
And I think, we're probably not going to be able to raise prices anymore unless there's another run up here next week. But we're still trading, and but we're definitely run out of price leverage this week. But we're up 30 to 50 from the bottom in terms of what we were willing to take, 3 weeks ago, or what we took, right? So it's and then also finger joints have rebounded a little bit. Those got down over $200 at one point, and now they've recovered some of that value by, let's say, they're up 50 or 60 also. and those are trading. So studs, I think studs were the first thing that we noticed were getting better at Hampton. And now I'm starting to see more attention being paid to dimension lumber here in my little business, and what I'm seeing on the trading floor. I see that the activity is more focused on dimensional. They've already solved their stud problems. Now they're moving on to dimension OSB. But I like the stud market in general. I mean, I told you guys I wanted to marry 2x4 92 and 5/8 and 104 and 5/8 a month ago. And,
Yep.
if you'd have just bought like 10 cars of each blindly at the bottom and not hedged them, you'd be okay right now. They get to a point where they're just so much cheaper than dimension. You have to pay attention just based on long-term averages. So hopefully that answers your question.
Those are great liquidity items too, Matt. Right?
I've got nothing that I want to dump right now, except I have 4 trucks of 2x4, 12-foot no grade stamp Euro sitting down in Cape. So if anybody's listening, I do want to dump those because I'm having a hard time finding who buys them.
Yeah, we lost some liquidity in the no grade stamp market, which is interesting. Because Ash, you and I were talking about this. We've seen some lists from other folks that we're going like, what are we missing? Why do we suck so bad?
Why is everybody asking $50 above our price?
Aren't we better? Aren't we better than this?
Well, I buy that stuff, Greg, and I bought some yesterday at 20 off. I mean, it's like it's a very small niche market is what it boils down to. You just have to find the right guy at the right moment. That's the answer to your question. There's no other answer.
If it was in Houston, we'd be better off on the 12s for sure. Did you go, Matt, or am I going?
I'll be quick because I didn't, like I said, I wasn't prepared. But I want to talk in general terms, things that I've noticed and things that I feel. This is my gut feelings. This is not me looking at a piece of paper and reading off a script. I want to own all 2x4 16s, all grades, all species, green or dry. I want to own 2x4 16s economy, number 3, utility, 2 and better, standard better, green, dry, Doug fir, spruce, hemlock, doesn't matter. I want to own them. I don't want to hedge them. I just want to own them. So I'm totally in love with 2x4 16s at the moment. Absolutely head over heels, gaga. I'm going to have multiple wives. I might even have a harem. Okay. That's how much I like that. Then as far as dating goes, who's going to be my concubine? I would say that I like 2x6 10s and 12s in whitewood. So that would be spruce or hem fir or white fir, ESLP, any of the western whitewood species or eastern spruce. I like 2x6 10s and 12s. You can buy them at a significant discount right now to random for what I'm selling random for by sometimes $50. And I just think that's a good trade for people that have saws. You can turn those into 116 and 5/8 or 128 and a quarter, whatever you want to do. It's good raw material fiber, good price point right now. I like seeing when 2x4 10s and 12s or 2x6 10s and 12s get a little too cheap. I think it's a sneaky trade, but you can make some money on it. As far as dumping goes, I don't want to own 2x4 12-foot number 3 or no grade stamp anymore. So I, like you, Ashley, am going to piggyback on you. I've got 12 trucks of 2x4 number 3 12s. If anybody wants to buy them in Dallas, come on over, baby. I'll sell them to you right. 12 and longer.
I love it. I love it. That's it. I love the 16-foot one, Matt. Agreed with you on that.
Thank you.
Yeah, well, I mean, you look at it's something that has been like pressured down. I mean, how often, do you see 16s trading at, $20, $30, $40 discount to random? And like the few times that you ever see it, 60, 90 days later, that's going to be the hot item. So I'm going to tell you right now, 2x4 16s in September are going to be the hottest thing out there. Absolutely. And I just look at it as if September futures is 510, what should 2x4 16s be worth? If they're worth the same as random, it's 510, and their historic average premium is somewhere between $15 and $25, right? So, instead of selling at, 465, 475, 480, they should be trading $30 to $50 a thousand higher today. the date is, Matt, you made a great point there. It was several weeks ago. I like the stud trims, and and I think I piggybacked on that with you also. And I still think, the great thing about 8 and 9 foot studs, 10-foot studs, liquidity. I mean, they're the potato chip of the industry. You could have a hard time with a lot of stuff, but you never have a hard time with that. There's always liquidity. And I think we should just stay consistent. Yeah. We're all dumping number 3, low grade, no grade stamp. So maybe I have to rethink that. And I'm gonna have to rethink that, because if we're all in the same boat, I mean, I don't want to be in that boat. I don't want to be in that boat. I want to get in a different boat.
That's funny.
I'm out next week. I've got a big day with Mr. Green, so I will not be here.
Oh, you going?
Okay.
Are you going with Brian? You going
No,
to Sand Hills?
No. I got my boy. I got my boys in town, and we got a big 36 going.
Oh wow!
And Matt, we've got like 3 trophies in the office now. Like Gregg is I think he's won every single club tournament that he's played in. Right?
I pick really good partners.
That's great. Well, listen.
Hang on, I gotta bring this one in too. Add it. I'm gonna bring this one in too. I gotta add it to the pile.
Beautiful. Well, guys, great. 50 minutes today we put in, and didn't feel like it. So
I know. It's fun.
It's fun
doing this.
I feel like we just got started.
Yeah, it's good that we could come in and feel a little bit happier for a change. I know the last couple of months have been difficult. Gregg, you're hitting yourself because you called a little too early. It doesn't matter. The bottom line is it's just good to have these conversations, and sometimes we're not always 100% accurate, but we're giving it to you the way we really feel, and that's what people, I think, really appreciate the most.
You get the good, the bad, the ugly, and as our disclaimer says, seek professional opinion for your financial situation.
There you go. Well, thanks, Matt. Thanks, Gregg. Look forward to getting together with Matt next week, and then
you guys could maybe get Yellow Pine or get Russ on, something like that. That'd be great. You guys
all right,
probably
sounds
get
good,
Charles
boys.
going. Charles he's always on the standby list.
There you go.
Yeah, all right, Charles. Charles, if you're listening, you're getting on.
All right, see you guys.
All right, guys. All right, bye.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.